Tax deductions for a home office. If you're working from home, whether you're a freelancer, gig worker, or small business owner, the home office deduction could be a game changer for your 2025 taxes. But with options like the simplified method, actual expenses, and even reimbursements through an S-Corp accountable plan, it can get confusing. Today, in this quick video, we will compare all three options, highlight the pros and cons, and help you decide which one fits your situation. Stick around till the end for a bonus tip on switching methods. Let's dive in. First, a quick refresher. To qualify for any home office deduction, your space must be used regularly and exclusively for business, like your principal place of work or where you meet clients. No claiming the kitchen table if it's also for family dinners. The exclusivity test is the hardest to meet. Crucial note, if you are solely a W-2 employee, you generally cannot claim this deduction. This benefit is primarily for the self-employed, freelancers, and business owners. Now, on to the methods. Option number one, the simplified method. This is the IRS's easy button for home office deductions. Here's how it works. You deduct $5 per square foot of your home office space up to a maximum of 300 square feet. That caps out at $1,500. No need to track utilities or mortgage payments, rent. It's all based on the size of the office. Pros here is that it's super straightforward, minimal paperwork, there's no depreciation calculations or recapture, and it's great for small spaces or if you hate record keeping. You can even use it if you're renting or own your home. Doesn't matter. Cons, it's capped. So if your actual costs are higher, you're leaving money on the table. Plus, it doesn't let you deduct other home-related expenses separately, and it's in lieu of actual costs. No mixing. So it's ideal for beginners or low-expense setups. Option number two, the actual expenses method. This is more involved, but potentially more rewarding. First, you calculate your business use percentage. Say if your office is 200 square feet in a 2,000 square foot house, that's 10%. Then you apply this percentage to your indirect expenses. These are costs that benefit the whole house, like your mortgage interest, rent, utilities, insurance, general repairs. For example, if your total indirect expenses are $30,000 a year, you deduct $3,000. Pro tip, there is a difference between indirect and direct expenses for your home office. You can deduct 100% of any direct expenses, costs that benefit only the office space. This includes things like a dedicated business phone line, painting the office, installing a new light fixture only in that workspace. You add direct expenses on top of your indirect expenses to come up with your total home office deduction. There is no cap here. So bigger offices or higher costs mean bigger savings. The pros of using this method is that it maximizes deductions if you have high expense or significant direct costs. It's flexible and can include depreciation on the home itself. Cons, tons of record keeping. You need receipts for everything. It's not worth it for tiny spaces. The fact that you get a benefit by depreciating your house also means that you have to pay depreciation recapture if you sell the house. If this is your forever home, then repaying depreciation should not be an issue. So, what's the difference? Simplified is quick and capped, perfect for simplicity and simplicity over savings. Actual digs into your real costs for potentially more deduction, but requires more proof. To quickly decide, try this math. If you have a 300 square foot office, your simplified deduction is $1,500. If your estimated business percentage, say 10%, multiplied by your total home expenses is higher than that, the actual method will be more profitable and advantageous. You can switch between these methods from year to year, so test both with your numbers. For 2025, if your space is under 300 square feet and expenses are low, go simplified. Otherwise, actual will probably win. If you have any doubts, plug the actual expense numbers into your software and compare that to the simplified method. Now, let's go one step further. If you're a business owner considering forming an S-Corp, there's a third powerhouse option: reimbursement under an accountable plan. Here's the deal. As an S-Corp shareholder employee, you can't just deduct home office on your personal return like a sole prop. Instead, the corporation reimburses you for actual home office expenses via an accountable plan. How? You track expenses like the actual method, including direct and indirect costs. You submit these expenses with substantiation, which usually means submitting a formal expense report to the corporation, along with copies of your utility bills and mortgage statements, and the corp cuts you a check. That reimbursement is tax-free to you. No income tax, no self-employment tax, and it's a deductible business expense for the corporation, which lowers its taxable income. The pros of this method: huge tax savings. It avoids payroll taxes on the amount and gets money out tax-free. This is great for higher expenses, and it provides audit protection with proper records. Many say this offers the greatest overall benefits for S-Corp owners. The cons is you need to form and maintain an S-Corp, which means setup costs, ongoing compliance like payroll, and strict rules. Excess reimbursements must be returned or they're taxable. So a lot more paperwork than simplified, and it's not for everyone. Sole props can't use it this way. If you're already an S-Corp, this is a no-brainer for your home office. Hey, my name is Arash. I help people create plans to pay less in taxes. Did you know if you like, subscribe, and comment on my videos, you will automatically save 10% in taxes? Okay, that's actually not true. Also, I need to let you know that none of this video should be taken as tax advice. However, I would love to give you individualized tax advice. All you have to do is schedule a consultation on my website linked below.